Hi, welcome to the Living and Working Abroad show. We've had great fun today trying to get live, um, so apologies for any delay, but um, we've got this week, we're going to look at tax year end opportunities for expats working abroad. In particular, we've had a UK budget which has got some interesting impact for expats that have been working abroad. So we want to consider some of those factors, but also look at the wider tax planning issue around about a tax year end. Thanks a lot for joining in, and let's get started. For many countries around the world, the calendar year is tax year end. So the tax year end, first of all, if you for many countries, you've already had to do your tax year end, but if you've got any decisions to make to the last year's 2022 return, then that due date for those revisions will come by the end of December, so 35 days. So contact us at boroughpartnership.com, especially with Cyprus. If you've submitted your return already, you've got another 30 days to do that revision. If you haven't submitted it already, then you haven't done that submission, then you've got the opportunity to be able to update that in the next 35 days before the end of the calendar year. Because if you're in a calendar tax year as well, if you're running a business, then by the end of the tax year, you've got the opportunity to make tax savings by doing capital or income expenses to reduce down your net profit at the end of the year. So if you're self-employed, abroad, wherever your tax residence and liability is for that business, by creating expenses before the end of the year, you can take tax straight away from the end of the calendar tax year. So for more information guidance on end of year tax planning and tax return updates and making sure your returns are submitted without penalty for a calendar tax year, contact us at boroughpartnership.com. For the UK, the tax year is the end of April, but the returns for 22-23 are due by the end of April 24. So there's still around 62-65 days to complete a UK tax return for an expat living and working abroad. So although there's a paper return deadline at the end of October, online is not due until the end of January, not overdue until the end of January. So again, if you've not started that process, you help as an expat to complete the UK tax return online. A product can help you in the UK or abroad to complete that tax return by the end of the year. In terms of the budget at the end of 24, there's going to be some changes with that have been introduced. Some of them are taking effect from 24, some of them in effect from April 24. Those changes now, the November budget statement, are partly politically designed, but also have significant impact. For one thing, business expenses can be fully expensed. It's been confirmed and it's been extended. If you're operating a personal service company in the UK, then you've got either a business or personal liability, then that can be fully expensed going forward for the current year and for the years ahead. So if you've got a capital expenditure that you want to do in the UK, rather than having that expense depreciated over 3 or 4 years, you can fully expense that now. So you've got a capital expenditure of 50,000 to spend. You can do 25%, up to 25% corporation tax on that straight away. My other guidance on fully expensing before the year end and other tax strategies, contact us at correctpartnership.com. In the UK as well, they're also aligning. So if you're an expat with a UK-based employment, professional service company or self-employment, they're aligning their tax years. So in the past, in the UK, you could have a tax year in December, for example, and that will be reported on the UK tax return in April, the end of the tax year. But going forward, they're now being aligned. So from April 24, they're starting to be brought together so that it's going to be part and part years until everybody is reporting the whole income, the period from 6th of April one year to the 5th of April next year. So in that one tax return. So it'll be your actual real income for that year rather than the 12 months to your business year end. So in the past, the business year end at the end of December, for example, would be reported in the following April. Over the next 2 or 3 years, that's going to change so that your full income for the UK tax year to the end of April is going to be reported in that tax year report. More information and guidance on aligning your UK business, self-employed, or service company accounts into the UK tax year, contact us at correctpartnership.com. Another major change came in the budget, and this could have a major impact on expats living and working abroad. When somebody's working, especially social insurance liability, in the UK it's called national insurance. UK expats pay into national insurance to get benefits while they're there. It's a form of taxation. It's a bit of a tax cut. But for expats, the only reason to pay into the national insurance system is potentially to get access to a full UK state pension at retirement age. Now, if you're living and working abroad, you've got a number of different opportunities. And those opportunities start to close down quite rapidly from April 24. In the autumn statement of 23, Class 2 was finally abolished for self-employed people in the UK. So if you're an expat living and working abroad, contracting to your personal service company or with the self-employed business in the UK, or if you're working abroad, you have the option to pay Class 2 each year as a way of contributing to national insurance. And so that stops from the end of 24. And after that, the only way that expats can pay going into 24-25 voluntary contribution route, which is Class 3, which is £900 a year, as opposed to Class 2 for expats, which is £200, the round figures. So there's a big difference in the amount of contributions to be made. But also for expats, because of changes in the past, there's a potential to catch up. So anybody that has got a gap in their national insurance contributions in terms of UK state pension, got an opportunity to catch up. Now, in any year, self-employed working in the UK or as an expat working abroad can pay the current year's national insurance to keep their tally up to date. They can go back to catch up to 6 years. So that's going to remain generally. But at the moment, and up until April 25, an option to pay an extra 10 years. So an expat at the moment can pay up to 17 years, up to April 24 of national insurance contributions to catch up. Now, if you're paying as Class 3, that would be £900 a year to give you £300 a year extra per year contribution to state pension when you retire. So the £200 a week UK state pension is only thing for many countries around the world, including expats in Cyprus. And that we confirm in this autumn statement that pension is still going to be triple locked index, and that's increased by 8% again next April. If you've got the full contribution, that means 35 years. So if you're living and working abroad, for the period of years, you need to make those national insurance contributions to top up that pension. So you've got the option of class 3, but up until April 24, you've got the option of class 2. Class 2 is only 2 a year, approximately, for expats. And you've also got this option of this extra 10 years. That's something that is by April 25. So you've got the option to catch up for 17 years where you're working abroad. By April 24, in class 2. After that, you'll have to pay on class 3. So a big opportunity for expats to secure a UK state while they've been living and working abroad. For information and guidance on that, contact us at projektpartnership.com on how to maximise your UK state pension. Another factor that's come up, we've been looking at Brexit, and Brexit is still current because the UK is still trying to settle down after it, with lots of political turbulence going around that. And now new governments elected this year in Italy and now Netherlands that are slightly more Eurosceptical. And with the new Dutch government, there's a talk of exit to follow Brexit. One of the big issues for expats with the EU is the Schengen Zone agreement, which limits people that are not residents or EU citizens to 90 days in 180 in the country within the EU. So it's a big restriction for expats who own property in any EU country. They can only stay in their villa for 3 months and 6 months unless they've got a residency permit or a residency visa. Different countries have got different requirements, but generally there is an allowance that allows you to have that residency permit. Proact are expat experts, and if you want help and guidance getting the residency permit to spend longer periods in your overseas holiday home or to relocate to an EU country, and with a permanent residency, a residence permit to get around the Schengen Zone short stay rules, you can contact us at projektpartnership.com. Another issue coming up with in the Schengen Zone is that there's 3 countries that have applied to join the Schengen Zone but not yet been let in. Romania and Bulgaria passed all the hurdles required, but have not yet been into the Schengen Zone. And the European Parliament are pushing again for that, and we could well see by the end of 23, Romania and Bulgaria are moving into the Schengen Zone, which would give freedom of movement for all EU citizens or anybody with an EU residence permit to move down the including Romania and Bulgaria. Cyprus is a slightly different question. It's a bit further behind, and it's not fully up to date yet. Will the EU accelerate it to bring all the EU countries under the Schengen Zone? They could do, but whether they've got the political will to do that, we need to wait and see. But otherwise, anybody with a Cyprus property is subject to the short stay rules unless they've got a residence permit. The free travel will still exist for UK citizens to Cyprus until it enters into the Schengen Zone. The next issue that the EU are struggling with is travel authorities. They're trying to introduce electronic travel authorizations. It's originally due to be introduced in 2022 and it's now been deferred and confirmed that it's not going to be introduced before 2025. And this means that the click application of the Schengen Zone will still be applied to them, and the electronic visa option to try to smooth that process is not available in the meanwhile. So for more help and guidance on how to get under this situation and get the residence permit, allow you free access to your holiday home and travel around Europe to get your residency permit, and as well as comply with contact partnership.com. Finally, today we've seen more news in China crisis. The two biggest China property companies are under investigation. They're multi-billion pound global enterprises with ghosts all over China and around the world. Properties have been built and financed but not sold. Big issues here for the property market globally and for China with these cities. And now the next organisation has been brought under investigation, the major bank worth 200 billion of lending in China's under investigation for dodgy loans that have been made to that. We've seen in the past, in the 2008, 2009 financial crisis based upon poor bank lending that brought down the economies in the United States and Europe. And this could now be a forerunner of what's going to happen in China. But that will have a knock-on effect for property around the world. It doesn't matter if you're selling your property, you still live in it, but it could make new property purchases cheaper. It could be recent property purchases lose their value. And if you've got a mortgage tied to that, it could lead to negative equity deals arising as property values fall. So caution is allowed on that. Consider what's happening in China and be cautious with your overseas property investment. More help and guidance on that, contact us at productpartnership.com. Thanks a lot for listening, and we'll see you again next time.